Simon's background is in infrastructure development, resilience and adaptation, leading projects across the UK, the Middle East and North America. Notable recent projects include first adoption of Smart Blue roof technology in Ontario, Canada, and the National Adaptation Plan for Iraq. He also developed and currently leads the innovation program at WSP, E&I. The innovation program, spot the connection with what we're doing here today, across Europe, working to both deliver innovation in-house and with partners. And John Mark Bunce. John is an equity research analyst at Cenkos Securities with a background in chemistry. John Steedman, one of our partners, is a chemist. And he has been specializing in research environmental technology companies in the public markets for nearly 20 years. This is not our panel, this is your panel. This is an opportunity for you to ask these gentlemen questions that occur to you. I intend to do my best to bring some things out, but please be thinking about that as we go. John Mark, I'd like to start with you, if I could. Please feel free to add, something to that very brief introduction I gave, and then we can maybe get into a little bit of the IPO route and what that begins to look like and offer for this community here.
Yes, so a bit more of my background. So, with a technical background, it's obviously helps analyse early stage companies where there is an element of equity story to them and it's not necessarily easy to value on traditional financial metrics such as multiples. I spent the last 7 years at Cenkos, which is a specialist investment bank with a very good track record in raising capital for growth companies on AIM, and I'll come more to that in a second. And the other sort of large stint of my career was 7 years at Nomura. In terms of recent transactions, I was the analyst on the IPO of CPH2, Clean Power Hydrogen, a membrane-free electrolyzer company, which I believe was a Greenbackers alumni from about 4 years ago. And we raised 30.5 million sterling for them on their AIM IPO at a pre-money of 90 million, and that effectively was a pre-revenue company. It had its first commercial orders for megawatt scale systems. So
yeah, I heard a small wow in the room there, so yeah, give me
it wasn't easy,
please. Thanks. Yeah, okay. Yeah, fantastic. That's really brilliant experience. And what I'd like to do is scratch under the surface of that a little bit. I've always formed the view that IPO as a potential exit for earlier stage investors, as a potential route for to growth capital for early businesses. Some businesses it would suit, some businesses perhaps not so much. I don't know if you've got some thinking on that, John?
Yeah, look, there's positives and negatives to the IPO route. The positives, the capital markets are a vast and competitive source of growth capital. Effectively, the money that is managed on the public markets dwarfs that's on the private capital markets. We're talking about 150 trillion roughly versus 10 trillion. Now, obviously, the private capital markets have grown more rapidly than the public markets in recent years, but still, there's obviously a far greater weight of capital on the public markets, and that's obviously because of the liquidity that they provide, the ability to see a price on screen and trade, and sort of the transparency of the process and the access to similar information for all kinds of investors in a timely fashion, and the speed at which capital can be raised. Now, an IPO is quite a long process. We typically talk about sort of 4 to 6 months, and I can talk about sort of some of the factors that affect the length of that process. But once companies are listed on the public markets, the real ace is the ability to raise capital very quickly. So if you have a strong shareholder register with deep-pocketed institutions and you've met their expectations, when you come with the next idea, or perhaps more pertinent for this, if you're looking to make an exit as a founder or a VC, If the broker and the bank has done their work correctly, they know where that kind of money could be, and that process can take as little as 2 weeks. And that is really night and day from the private capital markets. So that's sort of some of the benefits. Obviously, the drawbacks include obviously the fact that it is a very involved process. Not all companies have the systems and processes already in place. Financial reporting, legal structures, corporate governance, all of the history and dirty laundry is effectively aired in the admission document. The admission document also can become a competitive disadvantage because you're effectively having to tell your competitors what you do. And then on an ongoing basis, you have a duty to report and provide information in a timely manner to the whole of the market. And again, that requires management time and involvement. And as we say at Cenkos, and what we do very well is we make sure that the dissemination of information is very carefully managed for growth companies, because an equity story, a company that's not valued on a simple P or dividend yield, needs to be carefully managed because it can be very volatile. And as soon as you start missing expectations, things can go downwards and spiral downwards pretty quickly. So really managing the communication from the company and making sure that message is on par with what investors expect is what will enable that share price to head in the right direction and enable the exits. For us, mostly with growth companies, we see the IPO as the start of a journey, and we often work back from the IPO +1, +2, a period of time at which the company or the business has deployed the capital, demonstrated value, and then the investors are very happy to let significant amounts of old money be sold. Generally, for businesses that are not profitable, it is viewed slightly negatively, trying to sell down on day one on the IPO. So we operate a very long-term game. We don't encourage companies to rush to do an IPO because it's a costly process, and when you start that process and you fail, it is very painful for all, and we will not enter into an engagement if we don't think the money is there and the transaction can be done. But as I said, we always think about the IPO as the start. What is it you want to do? What's the realization you want to achieve? And work back from that and manage those expectations very carefully. So there's a lot of dynamics that go on to achieve a successful exit via the public markets. I said it doesn't suit everybody. That's for sure.
It's really interesting, and I'd like to in a few minutes, scratch under the surface of some of that, particularly the thought that the IPO you see as the start of a journey, whereas many companies from this end of the telescope will be seeing it as the end point of a journey. It's quite interesting. Before we get into that though, Simon, I'd just like to ask you a couple of questions. The last time I think I met you, I was inside an office here in London, which, as with many offices in London, had virtually no people in it because nobody's working in an office anymore. But you were kind enough to invite me to an internal workshop on innovation inside a big business, and that business had decided to invigorate and inspire some of its employees to go out and find innovation in marketplaces. And what I'd like to bring out a little bit is how companies such as those here can engage with big businesses and offer things to big businesses, find ways of contracting and engaging, because that's always a bit difficult and yet can be so beneficial. Would you mind talking a little bit about that?
Yeah, of course. So from WSP is a global professional services firm that specialises in environment and engineering, 60,000 people globally. So it covers a range of different disciplines. And so listening to a lot of the topics here today, from marine, from energy storage, well, we work on buildings, from the shards to local developments. We work on high-speed rail, HS2, tons of opportunity for the implementation of these types of applications. We have the client base that want to do better, who have the challenges of climate change, of budgets, of net zero transition, who need to do better, but they have the challenge of understanding what's out there in the marketplace and often use companies like us to try and understand that journey. I think it's fair to say, as innovation within a major organisation such as ours is a challenge. People are very busy, and perhaps more head down in their day-to-day work, making continuous improvement probably more ambitious than some of the things that we've heard today. So we're really good at that smaller end of the scale. What we're not very good at is that bigger end of the scale, which is absolutely where we need to go, and our clients need to go to meet the challenges of today and tomorrow. So recently we've actually launched a pilot program actually in the US called Emerge, which actually seeks to engage with sort of new tech to understand what it is, how we can work together in a partnership to roll this out as a pilot or rapidly accelerate adoption of these technologies. So one of the first things they did was look at, particularly within the sort of green sphere, of course, there were some generators, photovoltaic cells, so they can use them remotely, significantly lower greenhouse gases, worked with the developers and then roll them out onto one project and then roll them out onto 10, 20, 30 projects across the US once that test case had proven. So I think to be honest though, the challenge is getting to speak to the right person within those organisations, right?
A lot of nodding heads there, finding the right person. 3-4 weeks before you get the right person, sometimes.
Yeah, and you know, then once you've got that right person to speak to, it's about coming up with a shared goal, a shared problem statement of exactly how you're going to work together, what you're trying to address, come out with a strategy to address that, and then working out what's in it for both parties. No one likes a partnership where you're getting all the reward, we're doing all the legwork. That's going to wilt, and so being really upfront from the very outset how you could work together is really essential to then sort of rolling it out.
Yeah, and you know, one of the things that I'd just like to spend a minute or two talking about is when we Greenbackers are trying to help earlier stage businesses, we do try and listen hard to them and to markets, and indeed as part of our COP26 event in Glasgow, we were approached by some of the big companies on the basis that we might be able to be a bit of a window onto this world for them, onto the early stage tech world, and engage with them. We